was just going through some of my older analysis, journaling, whatever you want to call it, and I was actually looking at. I found here a little note about the DXY where I was talking about the dollar being bullish and the central bank monetary policy stance being more hawkish sided, even though they were targeting 2% inflation, they were still hawkish. Funny enough, around the same prices where we currently are now on the DXY. I'm just opening up the DXY large here. Yeah, around the same 100 price point. Now, in 2023, we attempted to reach 2% inflation. Didn't get there. And then for the remainder of 2024, a large majority of it, the Fed was mainly dovish. And then you kind of had the exact same thing in 2024 again, give or take a few weeks in between the timeline. But it's generally seen that in the transition of the new year, the Fed attempts to become more dovish, and then when you're around like let's say the December to New Year's period, or starting to enter winter, that's a better way to call it. It's starting to enter Q4. If the Fed didn't make it, they go dovish because yeah, the data also starts supporting it. Now, I don't have anything right here on my screen. This is 2021. Let's look at what's relevant. But we can very well trace this back to events coming out hawkish sided. Sort I'm showing what's it called resilience in across more sectors of the U.S. economy. Over time, it became less as rates were kept high, but more resilience, more optimism back then was feeding into rate cut bets being pushed back. And then in 2024, you had the same thing again. CPI and PPI both came out way above forecasts, and then Powell was forced to, in return, keep rates the same, give minimal speeches on what's to come. But as everyone was following the data, well, they were kind of forced to do this. Now, in 2023, one thing that I do want to notice, this period right here is also the October 7th period, which a lot of people remember as the day that the Israel and Gaza situation it reignited in such a fiery manner. I would like to think that that held some weight here on the dollar, even though the dollar it is generally also a safe haven as the world reserve currency. But this was bad because it involved U.S. politics. It involved a lot of U.S. communications. But that does not stop the fact that economic data was showing resilience and optimism. So you have this section right here. You have this section right here. And now down here, we are kind of starting to have the same thing. Could we see us breaking these highs and reaching 113? I say yes. And the reason I say yes is because this is also a 10-year kind of momentum we're following. I don't like to use trend lines, they're more just visual guides, I'd say. But it's a very good visual guide to have of kind of the market structure that the markets are kind of targeting. Okay, we broke a bit lower here, but this is the higher time frame after all. It doesn't just all switch willy nilly. But now we have with the Feds, we can go here. Look at their economic situation. The rates are going down. Okay, but CPI is far from 2%, and they just cut rates again. Okay, they did give some type of pushback on rate cut bets, but it's still sitting at 60%. If we go to, let me look for it. Uh, if we go right here, the CME Group futures, it's still sitting at 70% for the next meeting on the 10th of December, I'm pretty sure. Yeah, 10th of December, 70% chance of a 25 basis point cut, while CPI just undid, well, it kind of double bottomed at 2.4%. And yeah, we're back at February levels down. So if the Fed isn't careful, we're going to be doing more than a year of attempts to get inflation back to baseline levels. I'm sorry, I'm just processing all of this while I'm looking at it. I'm like, damn, they fucked up. Anyways, I'm not a central banker. I don't care. I just trade it. So that for now on dollar to me sounds realistic. Just to give people kind of a reminder, zoom out, keep keep looking at what matters, which is the sentiment shifts. How does the data support the sentiment shifts and the catalyst? And well, pricing also matters. And here we were basically at highs we haven't seen in a while. So it's who's to say that everyone just wants to keep buying here, keep buying here? Yeah, whatever. A lot of people also expected policy lag effects to come as soon as this crazy upside was introduced, which was also induced by the historical rate hike cycle, the worst one that the Fed has ever followed. Well, not the worst one. We had Volcker that was way worse, but it's pretty aggressive. The momentum of it, that is considered very aggressive. So yeah, I'm just gonna end it here, saying in starting right now in November, going through I'd say March, April 2026. Well, after Q1, we could just be seeing dollar bulls, and any type of catalyst that could inflate the dollar will also just help our sentiment a lot more. And given that a lot of emerging markets are struggling, a lot of people that hold largely dollar denominated bonds are struggling. The world isn't really in a good place right now, so automatically people will be turning to the dollar. That's just something we should see right now.